Hey Ian, welcome to the Deep Dive. We're diving into your question on cryptocurrency taxes today.
Yeah, it's a bit of a jungle out there.
It is.
But we've got you covered
We do.
with a whole stack of sources.
Yeah.
IRS notices, even court cases,
You bet.
all that good stuff.
All right, so.
The IRS sees crypto as property,
Okay.
not as currency.
Gotcha. So if I buy some Bitcoin, what triggers a tax bill?
Well, if you sell that Bitcoin for US dollars, that's a taxable event.
Makes sense.
The difference between what you paid for it, your basis,
Right.
and what you sold it for,
Yeah.
that's your gain or loss.
Capital gain or loss.
Yeah.
So it's kind of like stocks in a way.
Yeah, sort of. In principle, yes.
Okay.
But it gets a little trickier.
How so?
When you use crypto for other things, did you know that using Bitcoin to buy something,
Like what?
like a computer,
Oh, really?
is a taxable event?
I hadn't thought about that. Makes you think you need to keep really good records of every transaction.
Absolutely. Every single one.
Yeah.
And here's another one.
Okay.
This might surprise you.
Right. Yeah.
Trading one crypto for another,
Uh-huh.
like Bitcoin for Ethereum,
Right.
that's also taxable.
Wait, really?
Yeah.
Just swapping?
Yeah. The IRS sees that as exchanging property,
Oh, wow.
which triggers those tax rules.
Okay, I need to be more aware of that.
For sure.
So,
Yeah.
say I made some profit.
Mm-hmm.
How long I hold it
Right.
affect the taxes?
Great question. It all comes down to
Okay,
short-term versus long-term gains.
gotcha.
If you hold crypto for a year or less
Yeah,
before selling or exchanging,
right.
it's a short-term gain
Mm-hmm.
taxed at your ordinary income tax rate.
And if I hold it for longer than a year,
That's when the magic happens.
okay.
If you hold it for over a year, it becomes long-term
Uh-huh.
and gets taxed at a lower rate.
So it pays to hold on to it.
Big incentive to think long-term.
I see that, for sure. So we have a story here
Oh, yeah.
about a guy,
Uh-huh.
we'll call him D.
Okay.
He really learned a tough lesson about this.
He did.
He sold his Bitcoin to make a down payment on a house.
Poor D.
Yeah.
Really highlights how important it is
Yeah.
to understand the rules.
So he bought 5 Bitcoin a couple years earlier for $8,500 each.
Okay.
And when he sold them,
Yeah.
each one was worth $40,000.
Wow.
Yeah. So,
He thought he was being really smart with his finances,
right.
but ended up with a big tax bill
That he wasn't expecting.
that he was not expecting at all.
So he made a profit of $157,500. But because he didn't consider the taxes,
Yeah.
he ended up owing over $37,000.
That's a lot.
Ouch. So how do we track and report this stuff to the IRS?
Two key forms to remember.
Okay.
1099-K and the 1099-DA.
Okay.
The 1099-K
Yeah.
is issued by third-party payment processors,
Gotcha.
like PayPal, Venmo, Cash App. When you receive payments for goods or services above certain thresholds,
So this includes crypto.
it does.
Okay, so
If you hit those thresholds,
yeah.
you'll get a 1099-K.
And those thresholds are changing,
They are.
aren't they?
This year, it's $5,000.
Right.
But in 2025, it drops to $2,500.
Wow.
And by 2026,
Yeah.
it goes all the way down to $600.
That's huge.
Yeah.
So even small transactions could trigger it.
Exactly. Even if you don't receive a 1099-K,
Right.
you still have to report all your crypto income to the IRS.
So don't think you can fly under the radar
Nope.
just because you're dealing with small amounts.
Not at all. What about this new form 1099-DA?
Yeah, what's that all about?
This form is specifically for digital assets
Gotcha.
and will be issued by digital asset brokers.
Okay.
Exchanges certain wallet providers.
Right.
It's set to roll out in 2025.
And how's it going to affect me?
Well,
And other crypto users, I guess.
starting in 2026, the 1099-DA will include details about the cost basis of your crypto.
Okay.
Should make calculating gains and losses a lot easier.
That's good news.
It is.
Oh.
Anything to make tax season easier.
Yeah, for sure.
Right.
Absolutely.
Yeah.
All right, let's talk about James Kim.
Okay.
He's a real-life example of how not understanding crypto taxes can backfire.
This case really highlights the importance of understanding how the IRS views each tax year.
Okay.
Mr. Kim made some serious gains trading crypto in 2013 and 2017,
Okay.
but he suffered heavy losses
Yeah.
during the COVID downturn in 2020.
Right.
He argued his later losses should offset his earlier gains,
Makes sense.
but unfortunately, that's not how it works.
Really?
Yeah. The annual accounting principle means that each tax year is treated separately.
Oh, I see.
You can only carry losses forward
Okay.
to offset future gains.
Not backward to offset past ones.
Nope.
This program is brought to you by iFindTaxPro, where tax and legal compliance are made clear and management of client communication simple. iFindTaxPro.com is a platform for professionals and their clients. Open to everyone. Got crypto tax questions? Submit them to us. We just might feature you in an upcoming episode.
So are there any strategies that someone can use
Absolutely.
to minimize their crypto tax liability?
Our sources highlight some key insights from BitTax, a company that specializes in this.
Okay.
One of their recommendations
Yeah.
is strategic tax planning.
What does that look like?
Well, for example,
Yeah.
if you're diversifying your portfolio
Right.
and converting gains into U.S. dollars immediately, you can potentially avoid larger liabilities later.
So be proactive.
Exactly.
Think ahead.
Rather than just react as things come up.
Right. BitTax also emphasizes year-end strategies. For example, if you've got some assets that have lost value, selling those before the end of the year can offset gains.
So strategically, take a loss.
Right.
To balance out your wins.
Exactly.
That makes sense.
It does.
But it sounds like it requires a lot of attention.
Yeah.
And planning.
It does.
For sure.
And this is just general information.
Right.
Always best to consult with a qualified tax advisor.
Definitely no shame in that.
Nope.
Especially when you're dealing with something as complex as crypto.
Absolutely.
All right, so let's look ahead.
Okay.
Are there any changes on the horizon?
There are.
That could shake things up?
Yes. The Trump administration has put forth some proposals that could have a significant impact.
One that really caught my eye is eliminating capital gains tax on U.S.-issued cryptocurrencies.
That's a bold idea.
It is? Is that even a possibility?
It's hard to say for sure.
Yeah.
But if it happens, it could be huge.
Yeah, I can see how that would encourage more investment in domestic crypto projects.
For sure.
Another one I found interesting was the idea of a federal Bitcoin stockpile.
Yeah.
Sounds like something from a spy movie.
It does, doesn't it?
It does.
The idea is the government would accumulate Bitcoin.
Okay. For what?
Maybe seizures?
Oh, okay.
From criminal activities?
Gotcha.
Or even direct purchases.
So they're treating it as a strategic asset.
Exactly.
Like a digital gold.
Precisely. It would be a clear sign that the government is taking it seriously.
And I've even heard about broader regulatory reform.
There's talk of that.
To make the U.S. more crypto-friendly.
Yes. Potentially restructuring the SEC.
Wow.
Overturning some previous policies that were seen as hindering crypto growth.
Interesting.
And even addressing banking challenges.
This is all pretty big stuff.
It is.
But are these just proposals?
For now, they are.
Okay.
There's still a lot of hurdles.
Yeah.
Like getting approval from Congress.
For any tax law changes. So it's still early days.
Very early.
So a lot of uncertainty about what the future holds.
Definitely. The crypto landscape is always changing.
And the way it's taxed will evolve with it.
Exactly.
This program is brought to you by iFindTaxPro, where tax and legal compliance are made clear and management of client communications simple. iFindTaxPro.com is a platform for professionals and their clients. Open to everyone. Got crypto tax questions? Submit them to us. We just might feature you in an upcoming episode. It's a fascinating space to follow.
It is.
Even with all the potential changes.
Yeah.
It seems like the fundamentals we've discussed are still going to be relevant.
Absolutely. Understanding the basics.
Okay.
Like the property classification, the taxable events, the importance of record keeping.
Yeah.
Those are foundational.
I see.
And will continue to be important.
So even if some of these proposals come to fruition, this knowledge will still be valuable.
Absolutely. Staying informed is key.
Very true.
Especially in a dynamic field like crypto.
Well, we've covered a lot of ground.
We have, from the basics to potential policy shifts.
We've explored the pitfalls.
Like Dee's story.
Exactly.
And highlighted some strategies.
For managing crypto taxes.
Yes.
And emphasized getting guidance?
From a qualified advisor.
Right.
Hopefully, this deep dive has given you a clearer picture
of the crypto tax world.
And the tools to navigate it.
Absolutely.
It's been an eye-opening journey for sure.
It's an ever-evolving landscape.
It is.
New developments are happening all the time.
So staying curious and continuing to learn is key.
Definitely.
So Ian, we hope this has all been helpful.
Yeah, we hope so.
And if any other listeners out there have burning questions about crypto taxes.
Or anything else.
Yeah.
Any other financial mysteries you want us to unravel?
Don't hesitate to send them our way.
Head over to our website.
You never know. Your question could be the inspiration.
Yeah.
For our next deep dive. It's always fun to explore new topics.
Absolutely.
And help our listeners
make sense of it all.
Right.
Exactly. Until then, happy investing, everyone.
Happy investing.
And stay curious.
And remember, knowledge is power.
Especially when it comes to your finances.
For sure.
This episode was brought to you by iFindTaxPro, where tax and legal compliance are made clear and management of client communications simple. iFindTaxPro.com is a platform for professionals and their clients. Open to everyone.